Hello, Justin Merrill here, and this video is going to be about the fair tax. I'm going to rearrange the order that I released the videos as part of this marathon, but I assure you they will all still get out. So before I get started on the fair tax, I want to talk about some of the problems with our current tax system and the negative effects that it has. For example, the progressive income tax discourages productivity because as you move up to higher income levels, you get taxed at a higher rate, and that discourages working harder if you're going to get marginally less returns on your hours worked. Then you're going to be less productive. Similar with the capital gains tax, discourages investment as you pay a generally high tax on investment. Investment leads to greater productivity and production, and so again we're discouraging productivity. The third one is the estate tax. A lot of people are for an estate tax because they think it is immoral for someone to inherit wealth that they did not themselves earn. Whether you agree with that or not, you probably cannot deny the fact that estate tax lead to high unemployment and lower productivity because it breaks up what used to be productive, profitable businesses, and in order to pay the high estate taxes, businesses will have to be liquefied, and that means people will have to lose their jobs, and they'll be sold off just to pay the taxes on that. And last one I'll mention is the payroll taxes like Social Security and Medicare. Those lead to higher unemployment, and it affects the lower earners the most because that makes it the most expensive for the employers to hire with the higher costs. So all of these tax methods discourage savings and investment and lead to lower productivity, and also they're very inefficient revenue sources. You have the IRS, which is something like $750 billion a year to administrate and collect the information, and also you have another $750 billion a year that is spent on tax accountants and lawyers just to comply with the IRS. And also, outside of those numbers, there's additional what are called shoe leather costs, which means that people spend a lot of time in order to reduce their tax burden. They'll spend additional amount of time looking for a good tax accountant, or using that time in a way that isn't directly a monetary expense, but that could have been used for doing something more productive. And another complaint I have is the current system we have with all the exemptions and credits and everything. The tax code isn't used for revenue. If you wanted a revenue system, you wouldn't use our current tax revenue system. You would, because our tax code is used to regulate behavior. By taxing behavior that is deemed undesirable, and by rewarding other behavior that is deemed good by the politicians. And of course what's good and bad is very arbitrary or very subjective, so it all depends on who has the greatest lobbying power to the politicians. So and my last complaint, well, last one I'm going to mention at least, is that the current tax system is very intrusive. We have the IRS involved in all our personal financial information. In fact, businesses and banks are forced to submit to the IRS our personal information that they collect, or else suffer consequences. So I think that leads to a very bad state of affairs also. So the fair tax, whether you're familiar with it or not, at least on the outset, seems more desirable because it is a flat sales tax on on consumption. And it would be between the math you use, 23 to 30% on all consumption goods, and the tax would be collected at the point of sale. There would be about 1/5 of the people who are required to report taxes, because only businesses or people who sell their services or goods would be required to file those taxes, as those sales taxes. Whereas its current system, every company and every individual who earned income has to file. So it would be much more efficient. You could really scale down. I mean, they say abolish the IRS, but you're going to replace it with something realistically. But still, it would be a much more efficient way to administrate the revenue collection. So I initially supported this. One, it by putting a consumption tax, you're discouraging consumption, and encouraging savings and investment, because that's one thing I didn't mention. If you didn't already know, you would remove all other forms, well, almost all other forms of federal taxes. There's some debate, it's whether it's something like gas taxes, and some, like when you go to an airport you have to pay the runway fees and stuff like that. But for the most part, all other forms of taxation at the federal level would be abolished. So that sounds great, right? So I decided to look word for word at the legislation. It's 131 pages. I just read it, and I found some things that have changed my mind, frankly. And let me share those with you. The things that stand out most to me, that really ruin this legislation in my point of view, are, first of all, when they talk about the definition of a taxable employer. In general, the term taxable employer includes any household employing domestic servants and any government except for government enterprises. So I can kind of understand the logic. I don't agree with it, but that by having a servant in your house, maid or babysitter or whatever, you are both the employer and the consumer of their services. And they use this same logic to apply to governments, because the government is both the employer, or the people. Sorry, I got that mixed up. The people indirectly are both the employer of the government, the funder, right, the boss, and the consumer of the services of the government. So a taxable employer basically only applies to a maid or butler like Mr. Belvedere, or let's see, the government, which is like 20% or more of our it's like 26% of our GDP. That's just the federal government. Okay, so it goes on to say the exceptions. The taxable employer does not include any employer which is engaged in a trade or business, is a non-profit organization, and it goes into more details like religions, and a government enterprise. A government enterprise, just to save you the time of looking it up, means a for-profit operation run by the government. For example, a municipal golf course that is run for profit. So then it goes on to define a service as, for purposes of subparagraph A, the term service shall include any service performed by an employee for which the employee is paid wages or a salary by a taxable employer. Remember, taxable employer basically means the government or a person who has a maid in their house. And shall not include any service performed by an employee for which the employee is paid wages or salary by an employer in the regular course of the employer's trade or business, by an employer that is a not-for-profit organization, by an employer that is a government enterprise, by taxable employers to employees directly providing education and training. So this sets up that the term of service is another taxable act, and for example, say you go get your hair cut, yeah, that's a taxable act. But if you are the barber and you get paid by, you don't own the barber salon, you get paid by the barber salon, that is also a service. You're performing a service for your employer, but in this situation, you would not, the barber salon would have to pay taxes. So the only time when an employee will have to pay taxes is when they're a government employee, basically, or yeah. And so it goes on to say, certain wages or salary, in the case of wages or salary paid by a taxable employer, which is the government, which are taxable services, which is a government employee, the employer shall remit the tax imposed by Section 101. So the employer and employee of the government, it's double taxation, and it has to get collected at the time of, you know, paying the wages or performing the services. And it goes on to say, state government functions. No tax shall be imposed under Section 101 on state government functions that do not constitute the final consumption of property or services. Okay, that sounds great, but almost every function of government is a form of consumption. I mean, even if you... this is going to be probably a really bigger loophole or something that people will try to find, but I don't see it happening. For example, say you go and buy a $100,000 street sweeper. That's a capital investment, you could argue, but its ultimate form is to provide the services of sweeping the roads, which is a final consumption. So unless there's some sort of depreciation calculated in there, which still, either way, if it's a $100,000 item, the government's going to have to pay an additional 30% at the time, and then they have to pay an additional 30% every time they pay someone to drive it. So this is a ripoff for governments, if you haven't noticed yet. And it goes on to say, government purchases. Purchases by the federal government of taxable property and services shall be subject to the tax imposed by Section 101. So the federal government will also have to pay taxes to itself, kind of the same way that I've been a federal employee. You have to pay taxes. It seems kind of funny. You get money from the same person and then they take taxes out of it. But anyways, it gets even more ridiculous because the purchases of the federal government get remitted back to the Treasury. So that's even more ridiculous than right now. Alright, and purchases by state governments and their political subdivisions. Purchases by state governments and their political subdivisions of taxable property and services shall be subject to the tax imposed in Section 101. So there are no exemptions. In fact, I wouldn't even say there are no exemptions for the government. For state and local governments, there's double taxation because they're paying both on basically all of their services and purchases, and all of the salaries and wages they pay to their government employees. I don't even want to calculate how much additional cost this would shift to the state and local governments. Plus, they're counting, as part of the federal government's own expenditures, they're going to be counting that as revenue too. So obviously there's problems with this. I've been to fair tax representatives' lectures. I've read the book by Neil Bortz. And I don't remember seeing any of this in there at the time. So the thing that really frustrates me about this is that one of the slogans of the fair tax lobby is that individuals pay taxes, not organizations, not corporations, which is ultimately true, and I agree with that premise. So why is the fair tax lobby using this argument to justify not taxing corporations, nonprofits, and religious institutions, but double taxing the governments? This only shifts the massive tax burden of the federal government to the already fiscally troubled states. So, in summary, I support the idea behind tax reform, but this legislation is a huge turd in the punch bowl.